This is why you need to keep an eye on global markets. Oil, housing, and PMI numbers are driving big trends. Let's break down today's top shifts. WTI crude oil futures have dropped to the $70 per barrel mark. The reason? Signs suggest Iran may hold back on disrupting oil flows in the Persian Gulf, despite tensions with the US. Over 20 million barrels a day, about 20% of global supply, still move safely through the Strait of Hormuz. With supply fears easing, prices are falling sharply. Meanwhile, the US 10-year Treasury yield slid to 4.32%, its lowest since early May. This reflects easing concerns over immediate escalation after Iran's missile response to US strikes. Even so, Qatar insists on its right to retaliate after the recent attack on an American base in Doha. In the US, existing home sales rebounded in May, up 0.8% to an annualized 4.03 million units, beating forecasts. The S&P Global US Composite PMI edged down slightly to 52.8, showing a modest cooling, but marking nearly 2.5 years of expansion. Looking abroad, the UK Services PMI climbed to 51.3 in June, signaling steady growth. In Europe, Eurozone manufacturing held at 49.4, unchanged from May but below forecasts, while Germany's own PMI ticked up to 49.0. India's services PMI surged to 60.7, its fastest pace since last August, driven by rising output and new orders. For ongoing insights and updates, stay tuned to The Fellow Investor.